Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Laney and Bert, the Dividend Diplomats. Guys, today we're going to talk to you about a Dividend King that is showing some serious signs of undervaluation. This Dividend King, Laney, has been around for over 160 years. It is a great stock. We cannot wait to talk to you about it and see why it is shooting up my dividend stock watch list today.
Before we do, guys, you know the drill. Smash that subscribe button. Get us to 20,000 subscribers, guys. Hit that like button. Ride with us as we try to get to financial freedom by finding and buying undervalued dividend stocks. And Bert's got a real winner chicken dinner here.
All right, so what is going on in the market? We are recording this as Thursday, July 11th, and wow, what a day it was in the S&P 500. Prices are cooling, so you know what happens when that goes on. Interest rates start falling, stocks start shooting straight up, especially in the REIT sector. So check those out. REITs financials were on fire today. Luckily for us, this company's not in any of those sectors, Lanny. This is about as boring of an industry as you're going to get. In fact, there's an expression for how boring this company's product is, Lanny.
Oh, is there? As boring as better? What's the expression, Bert?
It's about as interesting as watching paint dry.
Oh, I thought you were going to go there, guys.
Hmm.
And that's where Bert is stepping in the ring here, guys. We're going to take a walk down this certain paint company.
Hmm.
And guys, we're talking solid valuation metrics, solid balance sheet, a 5-year steady growth rate on the top line revenue. And Bert, they've been growing dividends for quite a few years.
That's right, they're Dividend King for a reason. So today we are going to talk about PPG Industries, ticker symbol PPG. My favorite, Lanny, I can only tell you there's one knock for this company. I'm just going to get out of the way right here. It's headquartered in Pittsburgh. Can't like that. Boo, especially from these two Cleveland guys. Go Brownies, go Brownies. All right, but after that, this company has some pretty impressive brands in the paint sector. They have PPG, obviously, Glidden, Comex, and Sigma. And interestingly, Glidden has the primer that I always use for my house because I got a bunch of really old, nasty plaster walls. Something about the Glidden gripper is my favorite primer to use in my house when I need to paint. That's my fun
Why
fact of the
not?
day.
Why not?
Yeah.
Man, so PPG, Bert, I mean, strong brand, strong presence. Obviously, one of just a few. If you're not looking at the store brands, you're really looking at them. Sherwin. What's the other? Bear.
Yeah.
I think is
Yeah.
another
Those are the
popular.
big three, yeah. And what's cool is they're not only just in the residential. Sure, the residential's where you see them. You see them at Home Depot, Lowe's, Ace, wherever you want to buy them. But they're huge in the aerospace, auto, industrial, packaging, and coating. So everything gets painted, and PPG has their hands dipped into everything. It's awesome, and that's why they are so great in a high moat sector such as the paints and the coatings. Because as you said, there are three. There aren't too many companies that can just waltz right in and win some of those big contracts.
Yeah, you're right. And as we go through, guys, again, the market cap's about 31 billion right now and rising. We're going to go over a little bit of the earnings release from April as we wait the next quarter earnings here coming over the next couple of weeks. During that earnings release, they reported non-GAAP, I hate the non-GAAP measure, but EPS of $1.86, which was up 2% from last year. Not crazy, but still growth. Revenue is actually down slightly, about 2% to 4.3 billion for the quarter, but still on track to earn well over 16 to 17 billion dollars here for the year. But Burr, what about the outlook?
Yeah, they're saying organic sales growth will be in the low single digits. Adjusted EPS for the next quarter, though it's about to get released next week, as you said, will be between 242 and 252 for the full year. Same sales growth, adjusted EPS 834 to 859 range for the full fiscal year 2024.
Yeah, I mean, strong. I mean, that's just a hell of a lot of earnings. Um, and then if we actually look at kind of what they've done the last 5 years. Since 2019 through the end of 2023, they've grown revenue at the top by about 20.5% over that time period, from 15 billion to over 18 billion.
Yeah, and income though, this is where it gets interesting. Income's grown about 2%, and earnings per share has grown about 2.5%, growing to 1.27 in 2023 compared to 12.43. Again, EPS is 5.35 compared to 5.22 diluted EPS. So it's fascinating, Lanny, that you see such strong top line growth, but it hasn't trickled down to the bottom, meaning that there's some massive expense in the middle, whether it's salaries, operating expense, acquisition expenses, and charges, and a lot of one-time fees that have been dragging their bottom line down.
I mean, during those big M&A deals, I mean, we all know the legal outside, third party costs that go into it, not to mention severance packages, cost of different software conversions, deconversions. There's a lot of costs that go into buying a company and integrating them into one company, guys. So hopefully now they get some of these acquisitions behind them and they can actually start to earn more, as Bert and I were talking right before this video.
Yeah, so it's pretty solid here. And just looking at the balance sheet quickly, their current ratio is 1.55x. Quick ratio is 1.05x, which backs out that inventory. So both are over one, which is the metric we love to see as investors.
Yeah, yeah, it's fantastic. And again, we're going to go over the three dividend diplomat stock metrics: price to earnings ratio less than the S&P 500, dividend payout ratio less than 60%, history of growing dividends. We'll throw in the dividend yield. But Bert, that 5 year price to earnings ratio average, just to say it out here, you've done the research, 21 times earnings is their 5 year average. It's a good segue into that first metric.
Yeah, because their price is 129.71 as of July 11th. Earnings per share from Seeking Alpha are $8.42. That gives you a P/E ratio of 15.4, significantly lower than the company's 5 year average.
Yeah. Yeah. It's starting to really, you know, I guess show that value that hasn't been here for some time. Dividend, $2.60 for the year, broken that up over 4 quarters, 31% payout ratio.
Hmm.
Very safe, very low, room to pay, room to grow.
That's right. And they've grown that
That's a
dividend.
thing. We
If
should we should trademark that.
we should, yeah. Maybe we should put that on a coffee mug there and put the list of that in our store. Hmm.
Buy some
Hmm.
swag, guys, if you haven't
Yeah.
already.
Yeah, it's not painted with PPG, but yeah, check that swag store that's linked down there below. Their 5 year dividend growth rate is 6.25%. They've increased that dividend for 51 plus years. And again, as we wrote about there on Seeking Up, we'll put that article link down there in the comment section below. They are expected to announce a dividend increase here in July.
Can't wait to see what they do. I'm hoping and pushing for at least 6%. Um, But yeah, we can go to the dividend yield because the price is down 12%. The dividend yield is now at 2%, which is above their 5 year dividend yield average of 1.72%. So 28 basis point to that 5 year average margin, down 14% since this time last year, and up 11% over the past 5 years. So extremely lagging the S&P 500.
Yeah, so overall, PP&G performs very well in our dividend stocks for Airline. It's been one of the better performers of late that we've seen. Their 15.4 PE ratio showing signs of undervaluation. They have that very safe payout ratio of 31%. Strong history of increasing dividends. They are a dividend king with a solid 6% 5 year dividend growth rate and a solid yield of 2% that beats out the S&P 500. It's not the highest, but that's okay because it offers strong yield and solid dividend growth.
So what are you thinking here,
Yeah.
B?
As I mentioned in the intro, it's shooting very high up my dividend stock watch list. Just looking for a nice, solid, boring, consistent company to paint. They're one of the major players. They've been around for 160 plus years.
How can you do Sherwin like that?
Well, Sherwin's just too hot right now. Check that stock. Sherwin's stock is very highly valued. So PPG is a heavy discount compared to it. Overall, Love the company. We're going to put it on the watch list. And if I end up buying it, you guys will be the first to know. What do you think, Landy?
I'm gonna watch it, but what do you guys think out there watching this video? Let us know in the comments below. Do you own PPG stock? What other stocks are you guys buying as you build that passive income stream? Let us know.
If you haven't already, subscribe to the channel. Give this video a thumbs up. And remember, you're either with us or you're against us, Jack.
That was Bert, the Hurt, and Lane from the Dividend Diplomats. Over and out.